Hello, everyone. Welcome to this TradeStation Masterclass. We're going to go over some interesting TradeStation functionality in the area of strategy testing. We're going to use this class as a way of introducing strategy trading to you and ways in which you can analyze a strategy's performance and strategy's success. For those that are new to the Masterclass series, my name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. For me, it's always a pleasure to be here to talk about TradeStation. I've done it for so many years that the platform has become second nature to me. And as you can see in today's class, the title is Visualize Strategy Success with TradeGraphs. Before we get started, though, we have some disclosures to keep in mind. Just remember that every symbol and idea that we talk about is for educational purposes only. These are not recommendations of TradeStation. Also, active trading is not suitable for everyone, and past historical performance is no guarantee of future results. Today, we're going to talk about strategy trading, and we're going to look at performance reports of what the strategy did historically, but that's not a guarantee that the strategy will do the same thing going forward. So we just need to keep that in mind. If anybody needs additional information on these disclosures, go to www.tradestation.com/important-information. All right. I had created a PDF for everyone here that I'm going to share in just a moment right here in the chat window. So give me just a minute while I pull it up. It's just information on the trade graphs that we are going to take a look at today. If anyone has difficulties downloading the PDF, just let me know. Send me an email at this email address, education@tradestation.com, and I'll forward you the PDF as an attachment to you. But the link should automatically download onto your computer. So depending on security software you have there, sometimes you may encounter issues, but click it and it should go right into your downloads folder. All right, we're going to get started with the types of graphs that you can access when you do a historical backtest. Historical backtest is just a way of you applying entry and exit rules into a chart analysis window and have the strategy figure out where the entries and exits are. And what this report does, the strategy performance report, it compiles all that entry and exit data and generates performance graphs. So let's go ahead and take a look at them. There's two sections of graphs. We have performance graphs, and then we have trade graphs. The performance graphs are more like a general view of what the strategy has done in terms of profitability and in terms of drawdown, in terms of run up, the strategy has done in terms of profitability. The trade graphs are more detailed in terms of what every single trade did, because you are going to want to take action based on what a group of trades are doing. We're going to take a look at all these graphs and see what are the pros, what are the benefits of using these graphs. Let's go ahead and take them one by one. And we're going to get started by the first one, which is the equity curve line. But before I start explaining what this graph does, let's go ahead and set up our TradeStation with a strategy so we can see everything in a practical example. And what I did before we started this session today, I went to my TradeStation platform and I set up this chart. This chart is of Tesla, and it has 3 years of historical data. I'm looking at daily bars, and what I've done here is I've just added a built-in strategy. The strategy that I added is the MACD. If you go over here to studies and you click on add strategy, all of you should have these two strategies, MACD LE and MACD SE. So those are the two strategies that I'm using. The LE is for the long entry and the SE is for my short entry. So it doesn't have any exits, although since I have two opposing signals, a long entry and a short entry, they will exit each other automatically. It reverses the strategy. It's a reversal strategy. So it flips you back and forth between a long and a short. And in that flip, when you go from long to short and short to long, there's going to be an exit, because you cannot be long and short a stock at the same time. So if you're long and the strategy says, oh, you need to take a short trade, it'll generate a selling transaction to get rid of your long shares in order for the strategy to take you short. Even though we are adding two strategies that are entry strategies, since they are opposing entry signals, they'll exit each other out. So there's a built-in entry in the strategy engine. Hopefully that makes sense. But those are the only two strategies that I've added here to my chart. And I need that in order to pull up the strategy performance report. So I'm just going to click it. By the way, I didn't do any other tweak to the strategy. I used it right as it comes out of the box. That's the report that I'm looking at. If you want to see a overall performance view, this is a strategy that on this particular historical backtest, which is only 3 years of historical data, is a strategy that is giving me a positive result. I have a profit factor of 2.16, which tells me that the strategy made $2.16 for every dollar that it lost. So just a comparison between the gross profit and the gross loss. And you can see those two numbers right there in the graph, but it's a profitable backtest. We go back to what we said at the beginning of the class, the fact that this is a historical backtest that is profitable. It does not mean that I can just turn on the switch and expect to have the same results. It doesn't happen that way. But it does provide us an opportunity to look at the strategy and see if it's something that we can trade going forward based on some of the performance measures. Let's go ahead and take a look at some of the graphs. So we start here with performance graphs. So we have the two tabs. At the beginning, we said that we have two categories of graphs, performance graphs, and we have the trade graphs. Let's go and start here, the performance graphs. And the very first one is the equity curve line, similar to the one that we have here in the PowerPoint, which I've shared with everyone here on the PDF. And you have a quick description of what the graph does. But in a nutshell, what this is doing is giving you a view of where your equity is. You can see that at the very beginning, the very first 30 trades, so the x-axis right there at the bottom is number of trades. For the first 30 trades, our equity didn't move much. It did have some peaks. Every time that you reach an equity peak, it does plot a green dot. So we did have several green dots. That means we reached a new maximum. And from that point on, you still have a few more green dots that represent equity peaks. You can see that when the equity starts going down, it doesn't plot any green dots. And it's not until it's actually able to surpass one of the prior green dots, then a new green dot gets generated on the graph. So those green dots are important when you look at an equity curve line, because it does tell you how consistent the strategy is in generating profits. This particular strategy may not be or hasn't been optimized. So you have these periods where there's no new peak. You know, from trade number 82 or 83, we didn't make a peak until trade 135. So we were talking about a total of 50 trades that the strategy pretty much didn't do much. And a lot of times when we look at a graph like this, it just tends to help us think about the strategy and say, is that something that I would be able to tolerate? The fact that I'm trading across 50, all different trades, and I'm still not at the level I was on that 80th trade. Those are some of the things to think about when you look at strategy performance report. By the way, this particular graph, as you can see, this is, okay, so right here at the very top, it says, this graph displays an equity in US dollars versus trade number for all closed trades. This is only closed trades. It doesn't take into account if there's an open trade at the moment, and it only draws the equity from closed trade to closed trade. There's no representation of what happens in between, which is something that as a trader is important to you. Because if your trade is all over the place, if your trade has a lifespan of 3 trading days, and during those 3 days, it's been up and down all over the place, you know, that movement up and down is very important to a trader, because that's something you have to live through and tolerate and live minute by minute. So usually when you look at an equity curve line like this, it's been stripped, or it removes all the action in between a trade entry and a trade exit. Let's go and take a look at the next graph, which is an equity curve detail graph. As you can see here, the graph offers greater insight into trading performance than a general equity curve graph because it doesn't do it close to close. It does the calculation on a bar by bar basis. It's different. You don't get the specifics within a bar, but at least, it's calculating the P&L from bar to bar rather than close to close. If I go back here to my TradeStation and I compare my equity curve line to the detail one, let's go here to the drop down and go here and select my equity curve detailed. They both look very similar, although if you look over here at the very beginning section that was focusing on before the session started, you can see that I see a little bit more negative. Let me go back to the curve line. I still see some negative here as well. I was looking at the graph on the PowerPoint, not the actual graph of the strategy. I was testing both the equity curve line and the equity curve detail line are going to be very similar depending on how long your trades were. Like, for example, here we have a very long trade. We see a short trade generated in December. We have the exit in March. This is a trade that spanned for several months. Of course, that's not reflected here because the axis at the bottom is not based on time. It's based on trade to trade, but you can get the idea. Now, let me just see what trade number that was. There's a couple ways that you can identify that. For example, this entry, if I click on the background of the chart and I move my crosses over to where the trade was generated, you're going to find information on that single trade right here on the data tips window. If I look at the bottom of this data tips window, it tells me that I shorted 100 shares right there at the bottom. It says at 435.90. This happened December 24th, 2024. So 12/24/24, that's when the entry happened. Now let me see if I go here to the trade list and scroll down to December 2024, I see that trade right here. It's trade number 41, a short transaction on December 24th, 2024 at 435.90. So that was trade 41. If I come back here to the performance graphs, if I click here, it tells me what trade number that is. So on trade number 41, that's when we reach that new equity peak because of that huge profitable trade that spanned for several months. Of course, over here, it just calculates from trade 40 to trade 41, and it has that big, huge increase in equity. So because it doesn't calculate time. Now, if I go here into the equity curve detail, I can go to December. Here it is, December 2024. And you can see that there's no trade number at the bottom. I just see date. And from 12/24, I can see all the information that is happening on this particular trade until it actually exited. So you can see the close, the bar by bar movement of the prices until the trade was closed. That's the difference between one and the other. Hopefully that makes sense. Equity curve, similar to the equity curve line. It's just a different display. It just tells you, it just shades the area dark, nothing else than that. Let me go back here to my TradeStation. This is like this curve area. This is the equity curve line turned into an area chart. That's exactly what it is. Sometimes you get a little bit more visibility as to the negative areas. In fact, if we go to the next graph, which is the equity curve underwater, it's the graph that I like a lot. This one, the equity curve underwater, M, which is the monthly one, and this is the weekly one. Equity curve underwater, W for weekly. It tells you how long your strategy has been underwater. And underwater means just anything that is lower than a peak. So every time that the strategy reaches okay, I am back. My internet has been a little bit spotty today. Okay, so we're back here on TradeStation, and we were talking about this equity curve underwater monthly and equity curve underwater weekly that tells you the painful areas. It's only when you come back from that peak that you feel like you're losing your funds. Even if the strategy has been profitable for some time, after a peak, if you start giving away some of that profit, of course, that is a painful process. And this is what this graph is painting. Not only the times that you're underwater, but how significant and the magnitude of that drawdown. You have that in a percentage basis here. So this is a 6% drawdown from that peak. Interesting. Let's go to the next graph. Excellent. So those two are good. Equity curve underwater, monthly and weekly. Then we have the monthly net profit, which in this case combines. Let me see if it does. Let me go back to my strategy performance report and do a monthly net profit. This is a monthly net profit, and I see the 3 years. Okay, this is August. So September, October, November, December, and this is January. It does have all the months of the strategy performance report and the average P&L for each one of those months. If you want to see your P&L rather than represented from trade to trade, if you want to see it on a monthly basis, you can see which months the strategy performed better. I would have to sit here and try to find some correlation and see if there's any seasons where Tesla could have generated better profits than others. Tesla has been all over the place recently. It is my assumption that I'm not going to find any consistencies. But if we look at these high earning months, like this is February of 2025, and this is March of 2025. So those 2 months were really good for Tesla. Here's November of last year, and then this is July of last year, and this is January of last year. February and March were not necessarily good months in 2024. There were actually, even March was a losing month for Tesla on this particular strategy, but you get the idea if you want to break down your profitability by month. This is another way of looking at monthly profit. Instead of showing you the breakdown of month by month, it accumulates your P&L month by month. So this is very similar to what you would see in an equity curve line. It's just giving you a mark-to-mark analysis on a month-to-month basis rather than a trade-by-trade basis. So it's an interesting way of representing your profitability as well. This is the same as the profit by month, but it averages all the months together, which is what I was thinking that I was looking at, but I was not. This one particular, this is monthly net profit of all the months in the strategy backtest. So we have the 3 years of historical backtest. But if I select the accumulative net profit, the average profit by month, then we get a better picture of monthly profitability because it averages them together. You can see that February and March, even though 2024 was not good, February and March, when it averages all the Februaries and all the March together, they are two of the top generating months for Tesla. So January, February, and March are good months for Tesla in average. Of course, this is only 3 years. If you were to add more historical data, the picture would change, of course, because it introduces new data, but it's just a different way of looking at profitability. Total efficiency, I believe it's a different graph because this is the end of that graph, the average profit by month. If you want to see this one, which is total efficiency is a trade graph. So you'd have to go here to the strategy performance report and go to the trade graph tab. And the first graph that shows up is total efficiency. Total efficiency, it's a very interesting graph in the strategy performance report because it's going to look at every single trade generated by the backtest and calculate the efficiency of that trade. How good was the trade in entering and exiting the market? It's a very interesting calculation. Go back to the strategy performance report because in every trade, you have price points between the entry and the exit, all sorts of price points that are higher and price points that are lower. So that between this entry and between this exit, there could have been prices that would have given you a better efficiency, meaning that you would have generated a better profit and loss result. How is that? Because if you entered right here and you could have entered at a lower price, if it's a long trade, then it would have been more efficient. So that difference between what you entered at and what you could have entered at, giving you a better efficiency, that is what's represented here, total efficiency. So trade by trade, I'm able to tell how efficient the trade was. Some of those trades have, on this particular picture, 100% efficiency, which means that from all the price points between entry and exit, it actually entered and exited at the best prices possible. Let's take a look at some of those trades and see if we can make some sense out of that. Let's go here to my strategy performance report. You can see that none of my trades in this particular example are at 100%. The highest one, let me just click here and see. This one is trade number 41, has an efficiency of 80%. We looked at trade 41 earlier. That's the short trade that spanned for a few months. You can see that the efficiency was 80%. Why was it 80%? Because if we look at the trade itself, this is the day that we entered. The strategy entered at 435, and 435, if you can tell, is the very low of that candle. On this particular entry bar, the high was 462, which was close to 30 points higher. So what the strategy says, if you had entered at the very top of that bar, you would have been more efficient. So that value, of course, takes into account those prices. If I had entered at the very top of that bar, I would have generated more profits. The same for the exits is over here. If we had exited all the way down here at the most extreme trough, it would have given us a better efficiency. So overall, that trade had an 80% efficiency, which, to tell you the truth, is pretty good. How likely are you to get a 100% efficient trade? Very unlikely. By the time your technical indicators tell you that it's time to exit or time to enter, it's not going to be the optimal entry. But sometimes you do get those optimal entries by coincidence, which is great. But in a calculated strategy, most of the time, you're going to be around 80, 70% efficient. We do have some trades here that are closer to zero or even negative efficiency. So for example, let's check one at zero. So trade number 3 had an efficiency of 2%, close to zero. Let's take a look at trade number 3. Let me open this up. Okay, so we're talking about, this is my first trade, this is my second trade, and this is my third trade. This is trade number 3. If you look over here, it entered at 291 and it exited at 292. A flat trade. Everybody sees that? But do you also see the price movement between those 2 points? If the strategy had entered all the way here at the top, which was the high here, 303, and then exited all the way down here, which is 365, we're talking about almost 40 points of movement. That's why the efficiency on this trade is almost zero, because it actually didn't capture all that. It was more of a flat trade. In a trade that has a negative efficiency, for example, this is trade number 39. Let's go ahead and take a look at where it lands. 39 happened November 29th, 2024. So if I go here to the historical backtest, November, that's not it. Maybe this one, November 29th. This is the trade right here. So it went short at the very bottom and then exited at the very top. This is a major losing trade that was almost optimal if it had been a long trade, but it was a short trade. And on the short trade, it actually got that entry and exit totally wrong, because it actually went short at the very low point and exited at the very top. So it was a negative efficiency trade. Does that make sense? Let me go here to my trade graphs. On total efficiency, by the way, on this topic, which I found very interesting because I like the math that goes behind calculating all these trades. From looking at this graph, you can tell if your trades are achieving a certain efficiency target. You can see that blue line, which is an average. If I go over here to my real test, you can see that my average is flat. So maybe that's something that needs to be improved. The next graphs are the same style, so we're not going to go into them a lot, but it separates my entry from my exit. Of course, if you look at the overall trade, you have an entry and an exit, and then you see the efficiency overall. But if you want to see how efficient your entries are versus exits, maybe you have a different strategy to enter and then a separate strategy to exit, and you want to measure efficiency separately. That's why you have these two separate graphs. You have entry efficiency, and then you have exit efficiency, but they're exactly the same as the total efficiency. It's just that you can look at each side separately. Total trades, it's a graph that gives you where the trades land in the overall profitability, what your average profit and loss is. That's the blue line. And it also displays some outliers. If there's any outliers or what would be classified as an outlier, it would be on the positive side, it will be green, and on the negative side, it will be red. If I go back here to my real back test, let me go ahead and take a look. I have, as I said before, the entry and the exit efficiency. Let me go here to total trades. Clearly, I can see this outlier all the way at the very top. This is a trade number 41, you can tell, is an outlier because we had a profit of $20,000, not in line with everything else. The average is about $1,000. So it did flag that trade as an outlier. The same happened here at the bottom. Trade number 39, which we also looked at, that was the trade that started November 29th of 2024, was an outlier because it had a loss of $6,000. And the average overall for all trades is 1,048. So this is also very interesting in identifying those trades that you should not rely on. That was a very good trade. It spanned for several months, but how likely is for that situation to happen again? For you to stay on that trade for several months and be able to capture all that profit? Very unlikely, and that's why that trade is singled out as an outlier. Let's go back here to total trades, because now you have winning trades separated, and then you have losing trades separated, but it's exactly the same graph. But again, if you want to drill down and look at the losing trades or the winning trades, you can take a look at those separately. Like, for example, on my winning trades, my average winning trade is 3,991. You can see it inside of that yellow box. If I go to my losing trades, the average losing trades here is 1,767. Great measures that we can take a look into to tweak and modify our strategy. The drawdown, this is an interesting graph. Let me go back here to my PowerPoint. So winning trade, losing trades, drawdown. This illustrates the drawdown of each trade. So versus the trade number for all trades in the strategy performance report. All that it's showing you is drawdown. You can see that a lot of trades are right here at 0. They're like bundled together. It's just because those trades in particular did not have any drawdown. But you see all the other trades and how much drawdown they had. There's a trade here. I think it's trade 151. I cannot click here because this is an image that had huge drawdown. I'm not sure if that trade was winning or losing trade. It doesn't tell you, but it's a clear way of looking at which trades were the ones that generated the most drawdown for you. Let me go back here to my TradeStation and look at this drawdown. I have a trade here that had significant drawdown, which was trade number 39. Same trade that had the negative efficiency. Now we see it in a different graph, and we can say that this trade had the highest drawdown of 6,153. So that's drawdown. We didn't have any trade with 0 drawdown. So here, the drawdown for this trade, number 25, you can see the drawdown was $117. And this trade over here, was $92. So we didn't have any 0 drawdown trades. All of them had a little bit. If you go over here, then we have drawdown expressed as a P&L. An interesting way of looking at trades, because now we're also looking at the profitability of the trade and how much drawdown there was. Now, the length of the bar is important because the length of the bar is how much drawdown there was. Drawdown on a losing trade or drawdown on a winning trade. Like this green bar, we can see that this is a huge winning trade, but it had a huge drawdown too. This is trade number 41, the same trade that we've been looking at, but it did have a drawdown, a huge drawdown. The high profit was 20,000 and the lowest it got was 2,943. So the movement before it was able to capture those 20,000 was huge. So that's pretty much what it's telling you. How far did the price have to move in order for you to reach that profit or that loss? The losing trades are not as big, but this is just measuring drawdown. On the other one, drawdown, let's see, is there another one? There's no other one. Oh, there's a run up. So you have run up, which is very similar, average, and run up P&L. So this is the same concept, just letting you know what the run up has been on a winning trade and on a losing trade. One of the trade graphs that I also find very interesting are these maximum adverse excursion and maximum favorable excursion. You're going to see that in your strategy development, that these graphs are going to expand into more detail. And you're going to see that, for example, the drawdown and the drawdown P&L, the run up and the run up P&L, they kind of bundle. Think of them as a bundle. The same happens with the maximum adverse excursion and the maximum adverse excursion percent, because they are very similar graphs. They're just being expressed a little bit different. The same as we saw earlier on total efficiency is broken down into entry efficiency and exit efficiency. Total trades is broken down into winning trades and losing trades. Even though it looks like there's a lot of graphs here, they're just variations of the same graphs. And we're going to take a look at maximum adverse excursion, just to give you a look at what this graph is doing, because I think it's very interesting. From the get-go, we know that the green triangles are winning trades and the red triangles are losing trades. If you want to see how much they made or lost, you look at the left side. This is profit and loss. So if you're looking at, for example, this trade here, this is a red triangle. It was a losing trade. So it lost a little bit over $5,000. So even though we don't have negative values here on the left-hand side, if it's a red triangle you're looking at, that amount would be a losing amount. If you're looking at a green triangle, that is a winning amount that you're looking at. And right here at the bottom would be the drawdown, which is also very interesting. So you look at two axes at the same time. Let's go back to this losing trade. This is number 39. That was the trade number 39 that lost the most. We saw that it lost a little bit over 5,000, but the drawdown was over 6,000. If we look at the trade itself and the values, I can click on the background and see that the profit and loss was 61.53, which is the drawdown. So it actually reached the highest loss that it could achieve. $6,100 was the drawdown, 6,100 was the loss. Let's take a look at a different example here. So here we have, this is trade number 43. Trade number 43 had a loss of $3,500, but it had a drawdown of $5,000. So at a point, this trade was losing more than it actually ended up losing. A lot of times this graph will allow you to set up a stop loss or a trailing stop without giving away your winning trades. For example, this winning trade right here, this is the largest winning trade. This is trade number 41 that was flagged as an outlier. But if we were to set a stop that is too short, like a 2,500 or 2,000, it would have stopped that trade immediately. Why? Because it had a drawdown of $2,900. If we had a $2,000 stop, it would have stopped our trade at $2,000 loss. So this winning trade, which contributed to a large amount of our profits would have just taken out. Of course, this is one of those examples that you would want that trade to be removed because it's an outlier. This tells you when to set up a stop without affecting any of your winning trades. Let's say, for example, that you want to set a stop at $3,000 to remove some of these losing trades. We could do that. Let's do that here in the background so you can see how it affects this graph. One thing to be careful of is any of these, because if I set up a stop at 3,000, many of these trades had a drawdown lower than 3,000. So I think we should be okay. A lot of times it goes the other way. Let me go ahead and do a strategy here with a quick stop. I'm going to go ahead and add a strategy. I'm going to do a regular stop loss. And the stop loss that I'm going to, let me modify that stop. I think it just went right on. I'm going to say based on the position. So I'm going to change this to true. And the amount is going to be 3,000. Let's see. Let me click OK and close. All right. So you can see that our stop kicked in at 3,000. I don't have that many losing trades here on the far end. It actually did its trick. Now, if I go to the performance summary, you can see that the net profit went higher and my profit factor also went a little bit higher. We're in the right direction. This particular trade graph allows you to figure out where you can set your stop without affecting any of the trades that had that amount in drawdown. So that's something good to take a look at when you're analyzing trades. And that's it. I think those are the main graphs. Just use the PDF, which gives you a brief description of what each of the graph does. That's the maximum adverse excursion, also expressed as a percentage, if you like to think in percentages. Then we have the run-up and the maximum favorable excursion, which looks at the run-up instead of the drawdown. I don't see any questions here in the chat. I want everyone to explore all the functionality available here at TradeStation. And if anybody has any question, please reach out to me at education@tradestation.com, and I'll be glad to provide you support. Okay. Have a wonderful day. Check out our events calendar for upcoming sessions. Have a wonderful afternoon. And it's great to always see you. Goodbye, everyone.